How to enter a bill for a loan payment in QuickBooks. Hey everyone, this is Matt Holtquist with the Quickbooks University. If this video is helpful, please give it a thumbs up. Please share it. I sure would appreciate it. And also subscribe. That helps me grow the channel. I sure appreciate it. Okay, so had this question this week from one of our members because I had shown how to enter a check for a loan payment, just to give an example of what it looks like. And I had a question about, okay, well, how do I enter a bill for a loan payment? And so I wanted to walk you through that in this video. All right, so if you get a bill and you are using the enter and pay bills function in QuickBooks, there is a certain way that you definitely want to enter that bill. Okay, so what we're going to do is, now, we'll take an example. Assume you get this bill. It could be an email, it could be in the mail, whatever the case may be, and you get this bill. So you need to pay the bill. So how do we do that? All right, so we're going to go to Vendors, and we're going to go to Enter Bills, bring up the bill template screen here. First of all, we're going to enter the vendor. Okay, so in this sample file, we'll say that this is Bank of any city. And we're going to put the date. So what is the date of the bill? It will default to today's date, but you want to make sure that you put in the actual date of the bill. It'll say somewhere on there the statement date, the bill date, invoice date, whatever it is, but you want to put that in there. So let's say that that is 11/30/22, and we go down and a reference number. Okay, so what I always advocate people is to put in an invoice number. So the reference number is going to be an invoice number for any invoice that you get. Now, typically, a loan statement or a bill for a loan payment is not going to have an invoice number. So what do you do in that situation? Well, you can do a number of things. I'm going to show you how I do it and how I advise my clients to do it and members. But in general, what you want to do is you want to make sure that you're consistent in how you do this. So for every single time that you get an invoice for a bill, for a loan payment, make sure that you stay consistent. Okay, so for for one of these, for a loan payment, what I typically will do is put in the month. Okay, so you could say August. Okay, or since I used 11/30, you could put in November. Okay, or you could put in November 2022. Okay, just something that's going to be consistent every time, because the reason that you want to put in this reference number, which is really the invoice number, is that it helps you avoid entering duplicate bills. So if you get this bill again and you stay consistent and you say, hey, this is November 2022, you put that in, QuickBooks is going to alert you and say, you already have a bill for this. Is this a duplicate bill? Okay, so it's kind of a safety feature. So we'll put in November 2022, and we're going to say that this is $1,000. Okay, how about $1,000.33 for a loan payment? Due date, of course, you're going to put the due date. That's pretty self-explanatory. And then you see down here in the account, and of course you can put in memo and all that kind of stuff. You're going to see down here under the account, it's already broken out between Bank of any city, which is a note payable. So you can see your notes payable, Bank of any city. And then the second line is the interest expense. Okay, so we have anytime you have a note payable or a loan payment, you want to break out the accounts. This is called a split transaction in QuickBooks. So if you hear that reference, that's what this means. It's not complicated. All it means is you are splitting the bill between two accounts. Okay. So note payable, this is going to be the principal portion. So normally it's going to show you on your bill for the loan or your statement what the breakout is. Now sometimes it won't show the breakout for the current one, but it'll show for the previous month's payment, which is kind of a pain in the butt. But what you can do in that situation is estimate it for November. So if you get this November bill, and it just breaks it out, it doesn't break out anything for November. It just says you owe $1,000.33 for November's payment. And your October payment was $1,033, and here was the breakout between principal and interest. What I would do is go back into that bill and just adjust the breakout to how it should be. Now, it is kind of a pain. You got to go to last month's bill. But that's what we typically do. Now for this month's bill, what I will do is either put the same as October, the breakout between principal and interest, or estimate it, and then when I get next month's statement, I will break it out accordingly. Now many times also you can just go online, log into your account, and look at what that breakout is and record it appropriately. But the important thing is you want to break this out between principal and interest. Okay, so I'm going to delete this line, and we'll go up here, and we're going to say that this is what I'm going to do. Delete that so it automatically fills. Okay, so 350.33. I type in interest expense, 350.33. And if you have a class or, you know, a customer or whatever that you need to put to, then you can do that as well. So the important thing to remember here is you want to break it out between principal and interest. And if I hit save and close, and I go to, I'm going to go to my balance sheet because I want to show you why this is important. Okay, so if I pull up the balance sheet, you're going to see Bank of any city, note payable Bank of any city right here. You want to make sure that that principal balance is correct as a liability on your balance sheet. Okay? Any questions, any comments, feel free to leave those below. Also head over to the QuickBooks University. Link is down in the comments. It's the first pinned comment. Join the master class, and I look forward to seeing you there.